Alright, ICT traders, welcome back to the channel. One of the best way to start your day is to start by doing a top-down analysis on any currency pair or a particular asset you want to trade. Let me show you how to approach a top-down analysis in the simplest and straightforward way so you can see an entry or to be able to get your daily profile so that you can take the best type of entry. So let's start with the first thing you need. The first thing you need at all is to basically select your specified currency pair, and that is going to be your asset under watch. Then secondly, you need to look out for a time frame that is not going to expose you to too much data that you don't need, because too much data in the market is always a distraction. So let's assume this is my entire price action, and then I am looking at somewhere here, because price is currently here. Now, for you to get the simplest and straightforward trading bias, you need to look at the most recent price action. The most recent price action. If you want to go too far back into the past data, you will get yourself distracted. All right. And the time frame of trading for an intraday, you don't need to go to the weekly time frame, to the monthly time frame, to start looking at what is happening on the monthly or the weekly. As an intraday, what you're targeting is going to be a chunk of the daily movement. And then thirdly, now talking about how many pips should you be targeting. Targeting the maximum pips movement for a day should be divided into the sessions you are looking at. If you're looking at the Asian session, you don't need to target things like 30 pips, 40 pips. You don't need that. If you're looking at the London session, 18 to 25 pips is enough for you. If you're looking at the New York, 20 to 25 pips is enough for you. That is how you should be looking at intraday trading model. So let's start by this. You can use either the 4-hour time frame to get your big boy bias, because the higher time frame is always the time frame for bias. All right. Is always the time frame for bias, or you can use the daily time frame, if not the daily time frame. So either the 4-hour or the daily will give you your bias. That is it. If you can get that, it's perfect. Now, if you look at this carefully, you can do both of these on the daily time frame or the higher time frame. You can get your structure. All right. Get structure on the daily time frame, or you can drop down to the lower time frame, which is specifically best for intraday traders. 15 minutes is the best time frame for intraday traders. 15 minutes, not even the 1 hour. All right, 15 minutes, because you will be trading within a particular session of the day, and then entry can be done on 5 minutes. All right, entry is on 5 minutes. So your structure can be done on 15 minutes and the big boy time frame. That's the bias time frame. So let's go ahead and do that. So what do I have here? The most recent price action. Price had a break of structure bearish, right? I'm just showing you the progression of price. Break of structure bearish, and price went into this area, this level. But look at what price has been doing around this area. Price had to push below this low, all right, with this the body of the candle here, but then it quickly came back and what shifted structure here on the daily time frame. Now you have to establish what is your bias on the daily time frame. All right. After that, you have to establish what is your bias. Looking at this, if you can't see it from just your naked eyes, it means it is not there. Imagine if price was to be here. If price was here, right here, it simply means that there is no direction for that particular price. There is no direction. All right. So now that we finally have price breaking or shifting structure above, it simply means that we have a direction for price. And what is the direction? From what we are seeing, we are bullish. So that is it on the daily time frame. So what is your bias for the daily time frame? Is bullish. So the next thing to do also is to look at where price has traded into. There are 3 things you must establish to get where price is most likely to go to. One, where price has left, all right? Secondly, where price is at currently, current position of price. And then thirdly, where price is going to. All right? Where it left this area. That's a liquidity purge. And it's reverting into an internal range liquidity. But then it's shifted structure and it's currently at what? Now you have to look at, do we have a specific institutional reference point? That is it. Now, based on this, we can see that price have traded into an institutional reference point, a fair value gap, and then by extension, you have a bearish order block. Do you understand this? Alright, before we continue, guys, let me introduce you to FastBull.com. FastBull is an amazing platform. They have so many products that will help you as a trader. If you use the link in the description of my video, FastBull is totally free. It's not going to charge you any dime. So they have several products that you would love to use. Number one is the charts. The charts are absolutely amazing. Faster charts, and it is free for all users. Everything that is on this platform is free for all users. Now, one of the things that stand out for them, one of the features that stood out for them is the fact that I can actually tile more than 4 or even 6 different currencies for correlation. You can actually see, if you have so many on your watch list, you can actually tile them so you can see them on your chart without any hesitation. You can literally see it here, so you can see them visibly. It's almost the same futures with TradingView, but then this one charge 0 dime for all these active activities. So in the future, subsequently, they are working on how they can give a replay option freely for guys, so you can consider checking it for your own use. Another amazing feature, of course, is the Q&A with experts. You'll find them all under products. Right here it is. So this one allows you to ask a question and then experts will respond to you and give you the right answer you require. So you can literally see it. All you have to do is to sign up with FastBull, log in, and then you're going to have access to ask questions that are so pressing to you, and then you get answers for that. So you can see all these ones are experts responding to questions that were shared by different people according to their different locations around the globe. So coming back to our charts now, guys. So we know that price have traded into an institutional reference point. That is the point of interest, because as price was going, it was targeting this is the nearest point of interest. And since we know that price has been trading bearish, it is most likely going to continue bullish. But then, of course, I told you this time and again, even when price have traded into your point of interest, it is not certain that price will respect it. Price may react from there, but then it will take a specific signature from price to be able to know that. All right. So we know that price is currently inside our fair value gap, right? And it has already touched or mitigated this bearish order block. So two things will happen here. You pick your fib level, put it where price left initially to where price is at currently. What are you seeing? You are seeing two things specifically. You are seeing premium area and you are seeing discount area. What do you want to do with price? Once price comes back to your discount area, price gives you the best entry when it is in the discount area, not in the premium. And I'm not saying that price cannot go bullish from premium. So how do you know that price is going to come down to discount? Only when we drop down to the lower time frame, we would be able to see it. Notice that this is the daily time frame. Each of these candles is 1 day. Is a price action represented in 1 day. So it is only going to be foolishness for us to start taking trade either bullish, right? If you want, assuming you want to take trade, how do you take it? Is it bullish? Are you going to go bullish like that? Or you're going to go bearish? What is the criteria? What is the motivation behind going bullish or bearish? All right, these are the things I tell my students that are in the elite mentorship. For those of you who want to sign up with the elite mentorship, you can quickly do that. The link is in the description of this video. We have so many amazing things for all of you guys. You're going to be amazed by what we share on that platform. Massively, we give you 3 times attention in a week, and now I have started doing some Saturdays training ground. So amazing. A lot of them are amazed by what is happening. This is the Early Traders program. You can check it out. It goes for $99, and you're going to be in the community for 12 months being mentored by me. And for $99, I feel that is very, very fair enough for you guys. So you can check it out if you want to join us. We do have our sessions on Mondays, Wednesdays, and Fridays. And now I've added Saturday so that we can do more of training ground after the week trades, so we can see where people are wrong and where people are right. So coming back here, you can't take the sell here because you don't have any reason for it. All right. So going into the trade will be determined by what happens on the time frame for what? For structure. Now I will go down to the 15-minute time frame. So this is important. The 15-minute time frame is the time frame suitable for what? For a daily trader. So now I'll have to look out for the price action here. I will do structure. Look at the price action here. This guy is what we call a liquidity void. Do you want price to leave without filling it up? No, you have to wait for price to fill it up. And that is why we want to see an opportunity to fill it up together with price. Because if you look at this from here to here, we are in a premium area, and at least we want to see price trade into the discount, and the movement is going to be like this. Do you know that this movement can be the only movement for today? It may be the only movement you need for today. And that is to tell you that if that is going to happen, your bias for today is not bullish. Your overall bias is bullish, but your bias for today is bearish. Do you understand? You're basically counter trading. Do you understand? Is bearish, not bullish. So what do I need to establish that? You have to look out for price to do what? To shift structure on the 15-minute time frame, and that is going to be around here. This is the low, because you can literally see that if you bring your session breaks indicator or line, you can literally see that this shifting structure happened in Asia. You can't trust this. All right, wait for a shifting market structure that will come during a more volatile hour of the day. I'm even putting it here. This is supposed to be here, because right here is supposed to be here. Yes, that's where you're supposed to put your line and say, I want to see a market structure shift here. And what is the market structure shift going to be like? It must come with what? With displacement. What is displacement? Displacement is speed multiplied by distance in forex. So you want to see it comes like this, boom. You want to see speed and distance, not the way this one happened. You can see it struggled. So this one, you want to see it with speed. So if you comes with speed, then you can take the sell, right? You can take the sell. It is very much okay to take it. And that's how to establish your daily bias without any stress. If price does not give you that, what then do? You can look out for price to continue bullish, because I said it's a game of probability as it was happening at that point. So the next is that you're going to wait for price to take out the most recent high. If price finally takes out this high, then you should be looking at going bullish. Or you can use the kill zone strategy to simply go to indicators and put the Asian range and kill zones. What you need is that price has to sweep either the low of Asia or the high of Asia before you establish your trading bias. All right. So it's as simple as that. If price is sweeping the high of Asia and a shift structure on the 5-minute, you take sell. If price is sweeping the low of Asia, shift structure, you take buy to the high, to the highest level. This one to the lowest level. The kill zone strategy is always targeting the low and the high of Asia. That's the highest target you can have. But for a massive trade, wait for a shift in market structure here. Market structure shift here. All right, that should be your bias for today, and I hope this helps somebody. If you are in the community, you will have learned more than this, and you will have seen me do it in simplified manner, showing you what exactly will have happened. But this is enough for you to get everything you need. I am assuring you, this is enough for you to make a lot of money in the markets. Thank you very much, guys. See you in my next video.